All right, for those of you that were in the last session, you have to bear with me twice. I apologize up front, but this time I get to ask the questions instead of answer the questions. So actually, you won't hear from me that much. But I'm really excited about this panel because it's all things small business and B2B and kind of the learnings from three successful executives that have built some pretty impressive companies that are helping small businesses. And we're going to talk about that journey and the technology and the roadmap and around doing that. So I'm going to have each of you introduce yourself because it'll be easier that way than me to try and give the intro. Sean, we'll start with you.
Yeah, thanks. Appreciate it. So glad to be here with everyone. I'm Chief Information Officer of White Green Energy Fund. We are a private equity held financing company focused on the ESG space, primarily focused on resiliency enhancements to properties, homeowners, small businesses, larger businesses, commercial, anything that helps a property retain its value and become more resilient to climate change and just the effects of increasing fires on the West Coast, storms on the East Coast.
Hi everybody, I'm Mark Morrisette, CEO, co-founder of a company called FoxQuilt. We are an insurance technology company that's focused on providing small business owners access to fair value, customized insurance solutions. We originated the business in 2017, and we've become the first full stack transnational carrier between Canada and the US when we love Charlotte so much that we set up our operation here in Charlotte. So glad to call it home.
Yeah, hey everybody, Tanner Fritz, co-founder of iWin, formerly Anduin, and we're headquartered here in Charlotte. We were actually born in May of 2020, right after the pandemic started. About 45 people, venture-backed, and we're a vertical SaaS fintech serving professional services firms, so accounting firms, large law firms, specifically helping them with what's called the work-to-cash cycle, so speeding up cash flow, saving them time, and delivering a better client experience for their clients.
So I got to ask Sean, so you were all about kind of real estate and helping get the value out of their property. How did the pandemic affect your organization, and how does the current environment affect your organization? Let's start there.
Yeah, so the pandemic was actually good for our business, particularly on the residential side. People were staying home, and their most valued asset at that time was the home that they were living in. What are the improvements they could make to their homes with the budget that they would have used, as you said earlier on, to go to Disney World?
Right.
Installing solar on their homes, making it more energy efficient appliances and so forth. So our residential business did really well over the last 2 years. Presently, insurance rates are going up, particularly on the East Coast, and interest rates are going up. So there is some pressure to respond to that right now. But all in all, the last 2 years have been really great for us.
For Mark and Tanner, when we look at the lending ecosystem, it feels like that the pandemic, there was this time period where a lot of companies used it to do some innovation around their product and their solutions. Did you see that in your industry or with your company that you felt like, hey, there's, coming out of this, there's really a new expectation for innovation to help small businesses?
Yeah, absolutely. So we pride ourselves on, and listening to your former conversation around your raison d'etre to being, looking to afford small business greater access to capital in more innovative ways. We looked at the pandemic as an opportunity because you had a lot of insurance companies, traditional carriers, that were not providing capacity to these small business owners or mid-market enterprise for that matter. And they had nowhere to turn. They were basically providing kind of a one-size-fits-all product, packaged product, because they're paralyzed on these monolithic stacks. So our team focused on, really building all the back-end architecture that would afford these small business owners empowerment so they could build their own cart and suite of products. And we were able to accelerate through the pandemic because a lot of the carriers, traditional carriers, were then trying to catch up to the rest of the consumer market that's, you're used to now buying your groceries online and picking them up in a parking lot. So it's about releasing the vehicle and new products to multifaceted channels.
Can you before we move on, Mark, can you describe what that business owner's experience is coming through FoxQuilt versus going through a traditional carrier as far as...
The frustration and the pain point in the journey felt by a small business owner, whether you are a basement Etsy merchant or a traditional contractor, a plumber. Traditionally, they've always had to basically phone up an agent or a broker, and that agent broker will spray them to a myriad of different underwriting companies, and all through paper submission. And it will sit through that adjudication process for 3 weeks more at a time. And so we wanted to build the machine with the customer's interests in mind. And that machine, yes, it's got lots of dynamic algorithms around rating and underwriting logic, and certainly modular product that the customer can basically build bespoke solutions for themselves. But it's intended to be agnostic to wherever that customer resides. So if it's that sole proprietor that's just side hustling brand new business, or they're 1 to 5 employees, or they're part or entrenched in a larger portfolio at a digital bank or a Walmart marketplace, or white labeling it out, we want the same customer journey to be accessible. So you're really, you're emancipating that small business owner to access their own product, and you're saving them time and money because it's about 24/7. You're talking about decisions, machines making decisions at 1 a.m. at night. Well, we're getting end-to-end flow now at 3 a.m. in the morning. People are actually purchasing insurance. And what it does is it gives them the franchise, and franchises them with value in multi-operational product. Because no longer are people just a commercial painter. They might be doing some fencing or some handyman work. And these smarter technologies allow and afford for them to get customization based on what they actually do, and then price it accordingly, and then basically self-service functioning over that treaty long term. Because it's not just about onboarding new customers, it's about giving them self-service functionality over the life cycle of their policy and their journey. That's equally as important.
Got it. Tanner, you started the company, you said in May of 2020, right? After the pandemic. So what did you see in the environment that led to, what was the problem, initial problem you were seeking to solve? And why May 2020, do you feel like that was the moment to get that thing off the ground?
Yeah, so 2 of my fellow co-founders exited a prior business, and as they exited, they used a large accounting firm for the actual acquisition, and they got their bill 6 months later, and it was a email of a PDF, and they had to print it, and they literally had to write in their bank payment info and mail it in to pay this bill. And they're like, surely this can't be how this works for all accounting firms. But it was pretty common. So that was the initial hypothesis, is we could go to these firms and give them a magic wand with software to solve this problem. Sure enough, they were all for it. But in terms of just like the innovation trend, I think all of us probably benefited from the pandemic. Everybody got an adrenaline shot of technology, right? Like you had to do it. For us, it was accountants who were risk averse and are like, no, we'll never need that now. You're on Zoom, you're doing these things every day. You see the value of technology. So we actually co-developed with a couple of firms that said, no risk engagement, let us build this for you and prove it out. And that's how we got started. That was the problem to solve. But just the other piece I'd say is, for our customers who are doing outsourced bookkeeping for small businesses, they're really the finance arm for a lot of these SMBs as accountants. They're trying to come as advisors and say, hey, let us bring you the tool set you need. We're your fractional CFO. Here's embedded finance, here's insurance. So they're really competing with a lot of the fintechs, a lot of the banks who are traditionally providing these services. So it's kind of interesting to be a supplier towards these advisors of SMBs.
Who would you say your competitors are? Is it, is Bill.com in that category, or help me understand kind of that
they're
market.
doing accounts payable mostly, right? The AvidXchange, Bill.com. We're working with large professional services firms that have been on such old technology, right? On-premise old software, closed systems, and we've integrated with the systems. Nobody's taken time to do that. So now we've got this advantage to say, hey, we can see the data. Let's give you modern processes. Let's give you modern applications with this data. So we're competing with banks, with payment portal solutions or AR automation solutions that aren't integrated, and we are. So that's kind of our big competitive advantage there.
For any one of the three of you, when you look at the small business kind of environment or marketplace and the challenges that they go through, what do you feel like are what are the common challenges or pitfalls that they go through that you're trying to help them solve? Like, what is it like to be the small business owner, and what is it that you're trying to kind of accelerate as you look at their life?
For our platform, what small, medium-sized businesses are looking for is really helping them grow their business. We have to be a partner in that. We are a complement to their product offerings. So these are small construction companies, small property enhancement companies. They're talking to their customer, and their customer may not have financing available to them. So we complement their offering at that point of sale. And the ability for them, they're small, medium-sized businesses, maybe they don't have a line of credit, they can't get one, although they may have an opportunity to speak with your business about that. They want it to be easy for their customers to apply and get financing, and they want to be paid quickly.
Yep.
And that's what the platform that we've built out is really providing them as a value proposition.
And what are you underwriting against that's different than a traditional lender? How are you evaluating?
Yeah, what we're looking at, and this is where our platform is also very interesting. We're not using the historical, FICO or any of these other sort of methods of understanding, someone's ability to pay. We're looking at the value of their property, and we're giving them longer terms, so smaller payments. And we're making that property improvement very affordable for them. So property value is really the key measure that we're using.
Okay.
And that really makes it a great value proposition then for these small businesses to offer our product to their customers.
So that they can go in and they can help them, do a home remodel, or can it be a commercial remodel as well?
It can be commercial, as long as it's focused on the ESG space. So really helping that property be more resilient, helping it, come back climate change or respond to climate change. And any market we operate in, we're offering the customer the same interest rates no matter where they are or what their means are, because we're using property value as the measure.
And do they need to have equity in their property?
As long as they have equity in their property, that's what we use.
Great. Mark?
Yeah, so we embrace technology to basically reshape the product specific to the customer's needs, where they are in the journey of their operation. So, you come in as a new entrepreneur and we focus on a 1 to 5 employee small business, and they may just need a baseline general liability product, but we don't stop short there. The technology distills it down to business class or an industry code first, and then peels it apart on actually what they're doing as an operation. The traditional carrier marketplace provides basically a segment level one size fits all packaged product and experience. You've got good guys in the segment subsidizing the loss leaders. What we've done is build technology to basically say, okay, back to my contractor example of a commercial painter. You might be doing some industrial painting and some exterior painting, but they might be doing some handyman work and some plumbing or electrical. And it's giving that multi-operational pricing and adjudicating the underwriting behind that, so they can have one fair treaty. And you think about the persona of a small business owner. They're super proud. They've built this thing and they've had no purchasing power in one of their largest expenses in their business. They've been dictated the rules of engagement from the traditional carrier for so long. So they're winning in basically getting a fair value product that they can grow with as well. They need it to basically engage new customers. And when they grow from 1 to 5 to 20, employees to higher revenues, it's about allowing for them to have self-service over increasing their limits and their capacity, to adding on instantly a cyber offering, a workers' compensation product, multiple products instantly on one policy, one treaty. So there's real opportunity for more FoxQuilts to be introduced to the market to reward these small business owners.
Cool.
Brock, the question is the challenges we're helping them overcome?
Yeah, just what, for those small business owners, what is it that the technology that you're doing that that helps them overcome their day-to-day, in their life, the challenges they're going through?
So for the end clients using the technology we provide these professional services firms, they can pay from their phone. They don't have to send in this, paper check.
Yep.
And for the actual firms, it's a lot of, they're running into challenges of really good back office people or admin people are hard to find. Talent shortage is kind of causing people to jump ship. And so if we can step in as an embedded finance tool that helps them with automation, helps them with kind of offline services, we're doing that, for instance, with their traditional bank lockbox services, where now they can come and use our system, help automate some of their snail mail and their check depositing because we're integrated to their underlying core system.
When you think about building and scaling the business, I kind of look at it at two phases. There's this phase around kind of nail it, which is around kind of identifying product market fit. Do we have something that our customers are going to like? And then once you feel like you got product market fit, it's scaling, and there's all the challenges that come with that. As executives, in your experience, which was the most challenging phase for your company? Was it the nail it product market fit, or was it the scale it? And what were those challenges that you experienced?
Yeah. The product market fit was a little easier for us. Scaling and knowing where to focus the next set of resources and energy around. There's so many opportunities that we all have, and being able to be focused is really tough to do. And that spans across all the different departments within our organization, where you're looking for really great R&D, engineering, and product folks to be able to be business-minded. You're looking for really great sales, customer success folks to be able to be more technology and tech-oriented. And having everybody swim the same way is very difficult to be able to say, yeah, this is the next move we're making. Here's the next 3-6 months we're going to dedicate to be able to scale.
Yeah, I guess there's two parts to this answer. So the product market fit, like the rest of the panel, we're in a regulatory environment. Each jurisdiction, each state, each province that we operate has nuances and differences. And we always look at, locksmith in Sudbury, Ontario is a locksmith in Erie, Pennsylvania. And we want them to feel that no friction, the same access, the same journey. But you've got to, in this regulated insurance industry where you've got to file on emitted paper and create your own, manufacture your own products, you got to build all the IP in-house. And you do it with that fortitude early on because you want to release the vehicle and these products to diversified distribution channels. But it takes a lot of intellectual capital to build that stack. And then we don't rely on outside vendors for just even managing the life cycle of the policy around policy administration, not sexy software work, but we decided to build that early on in-house as well, because it allows you to take the handcuffs off. And now, this time in our journey, it's about acceleration, scale, growth, the fun stuff, where we're releasing product to embedded enterprises, wholesalers, and again, where you're really learning where there's with the customer themselves, B2B2C. So, yeah.
Yeah, for us, the hard part, very similar to what Mark said, is making it easy to be compliant in the lending space. We can have two counties that sit right opposite or next to each other and have different rules and requirements for how we lend in those two different counties. That gets very complicated.
Yep.
And so for our customers, we need to take that difficulty and really obfuscate it and make it easy for them. That's the hard part. But as we've done that, scaling is then becoming easier. So adding additional ancillary products, once we've done the second one, the third, fourth, 10th, that becomes easy. And our value proposition then scales too, because we become then a multi-product lending partner for them, particularly in the commercial channel. We're not just one lending product, we're a multitude of lending products that are all sort of adjacent to each other. So we become more like a lending marketplace in this niche space that creates a great value proposition.
Is the regulatory framework that diverse that it, county by county, or is it
Yeah.
state by state? I mean, we have to deal state by state.
Yeah.
I can't imagine going
Because-
deeper than that.
Yeah, property values are assessed at a tax collector level. So we really have to work within tax collector jurisdictions. And that can literally not just be county by county, that could be one side of the street to the other.
Wow.
And so figuring out and really implementing that in a platform that makes it, just like searching on Google or on Waze for an address,
Yeah.
and telling you exactly, how you can borrow and making it uniform across all the jurisdictions we operate in, that's the hard part. But as we've done that, it's been then easier to scale.
So I'm going to go off script for a minute on these
Yeah.
next few questions. Let's talk regulatory. So you bring up a really, for those that are in the audience that may, be dealing with, and I know each of you have different, especially in insurance and lending challenges. So someone that's kind of trying to navigate the regulatory world, what advice, recommendations, would you give to be able to say, avoid these pitfalls or make sure you do this, or, what guidance would you give around navigating the regulatory framework?
Certainly always, start with your ethics and your principles as a company. If you're taking the high road all the time, if you're really looking at a company as being there to provide good for your partners and ultimately for their customers, you're gonna do well. Most of the financial regulatory hurdles that companies like ours face were introduced because of bad actors. And so that's the main thing that you have to do.
Yeah. Mark, what about you?
Yeah, I think there's two parts. First and foremost, you've got, we are a commercial insurance company at the end of the day. We manufacture our own products. Our bread and butter is general liability and E&O. And we have to file through each regulatory body within each state and province. And what that means is that we had a broader vision. We always build our software and our product ubiquitous for North American marketplace. But when we launch and file, we look at more conservative regulatory states so that we can learn the pain points of filing. And for us, we have to be more conscious because it's not just about the actual product that we created, the underwriting, adjudication logic, and pricing, but upstream, because we own all the policy admin as well. So that customer comes in at 11 p.m. at night to increase their limits and add another product to their arsenal in their cart. It's got to reconcile to the zero. And the ins and outs in those forms in Tennessee are different than Illinois. So we've got to basically take all those different regulatory authorities, the people behind that, along the journey. And it's almost like a sales pipeline. You've got to really nurture the relationship. But we also have a reinsurance partner that's been wonderful and prolific in our journey. The largest in the world, Munich Re. And we've afforded them to basically come through, because we've had to enlighten them as well as these technology builds with regards to stress testing the technology, UA testing these different product releases through state expansions. So you've got to manage the people as equally as important as what states you're selecting to basically learn from. Because when you start with the conservative states, then you can replicate it a lot easier and quicker through the more liberal ones.
Okay. We're talking about driving forward in basically fintech and insurtech, right? And each of you have kind of created these innovative solutions to solve these problems for small businesses and consumers. So what would you say are the key principles to your success around innovation? Like what is it that has allowed you to, you've got a market that had some incumbents that maybe were slower or weren't solving the need. What is it that is part of your culture or has helped you contribute to the success of your innovation? Let's start down, Tanner.
Yeah, I'd say the biggest success factor has been kind of working alongside our end customers. And so that's really how we started with our hypothesis and how we continue today. Customers that have been along the journey with us for the 2 years we've been alive now, we're meeting with them every month. It's how do we continue the conversation nonstop? It's not that you signed up for our services and we walk away. It's how do we continue to really consume more and more of the finance stack that they're used to outsourcing or not having internal, and we want to give them the tool set that they need to be able to just further embed us within their internal team and view us as an extension of the team.
Good, Sean.
Yeah, I absolutely want to tag on to that. Voice of the customer. So, we're primarily a virtual first company, but no matter where our employees sit, we're encouraging them to get out and experience the product. Visit with those small, medium-sized businesses that work with us. What are the pain points in selling their products and services to their customers, and how can we alleviate that? Deeper integration with their sales tools and their platforms, simplicity, help desks and white glove service at our contact center. So the voice of the customer is really what we're using as a primary research tool to embed into how we're building our platform out, and that's been invaluable for us as we continue to innovate.
Love it. Mark?
Yeah, being close to the customer is super important. So we love the lab within our direct-to-consumer channel. It shows where there's price and product dislocation. If you think about all these emerging markets, e-commerce retailers, whether they're drop shipping to third-party sellers or Wayfair and Walmart, everywhere else, there's actually no product in the marketplace for them today. They're kicked out of these standard carrier marketplaces. They have to go to an open Lloyd's or a wholesaler marketplace. It means there's real dislocation and problem that we have to solve. And we saw kind of Board Witness the first generation of insurtechs, and they're more focused on hyperscale through customer acquisition. There wasn't much ingenuity on the underlying product itself, and they outsourced a lot of the back-end architecture to third parties. So we really decided early on that we're going to really focus on attracting really smart, curious people, and the magic comes from the people to design and engineer the whole stack and all of the IP in-house, so that we could really learn from close to customer, direct to consumer, and then transcend that value offering, embedding in it and opening up these APIs to these different enterprises where there's like-in-kind customers.
Is your innovation, would you, just to kind of lightning round for a second, would you describe it more as like innovation that is for the end user, the customer? Is it infrastructure innovation? Is it financial innovation? Where would you guys describe your innovation, your differentiator?
Yeah, I'd say it's a lot of that.
All the above?
Yeah. I mean, the purpose of all of our companies here is to enrich the lives of our customers so that they buy more and tell their friends, right? So we want to continue to make sure that they feel like they're met, but at the same time, we're continually pursuing and have a couple of individuals, that's their whole role, is how do you think about the network effects? How do you think about kind of the bigger opportunities in the markets we're serving or in the markets we're not serving, right? So I don't think we can be just heads down on one or the other. We've got to be doing both.
Got it.
Yeah, I mean, we wake up and go to bed with the customer's interest in mind, first and foremost, always. And we built the stack and the product agnostic to where they reside. Super important. Point of sale online in a marketplace or an enterprise, one like-in-kind network. Direct to consumer, where you're just one person side hustling. Or it's very important for us that we embrace the traditional value chain as well through omni experience, where they need a handheld through an agent, broker, a traditional carrier. We want to embrace all those different origination points, but we want the customer to feel like they've got the same rich experience and access to the same journey and the same product, whether you're representing 1 or 2 employees or 1,000.
Yeah, for us, it's all of the same. We want to deliver wow. Our small business partners, their customers have a multitude of lending products that they have access to. Why choose us? We want to be wow for them, and we want to provide them with the best service, the best experience, the best outcome possible. And to me, that's our differentiator, and that's what we put into our platform every day.
Great. Last session, and the theme of this conference is all about kind of recharge, and there's this component of, innovation plus, kind of our personal health and wellness and culture. What's 1 or 2 items things that you learned during the pandemic that have shaped the way you think about culture, that has really kind of a big part of of the value that or the culture you have at your organization. Let's start down, Tanner.
Yeah. We actually defined our values before we knew what we were doing. A couple co-founders sat around and said, let's debate these for 3 weeks and think about the type of company we want to create. Didn't even know what that was going to be. So it's all about attracting the right people. And so those are courage, build, and trust. And we try and live those out and come back to them. They're printed out on all of our desks, right? So we can see them every day. But I was thinking about your prior session here, and you're talking about retention and incentives and experiences, right? One of the things we've done is similar where, we want to attract the best talent, but also make sure they have margin in their life. Working at a startup's not easy. So we do an annual vacation stipend, and it goes up by $1,000 every year. And it's like, hey, you stay here, you're going to have a great vacation. We want you to go recharge, do those things, get that mental space, get that time with your family. So that's one of the things we do.
Love that.
Yeah, so we're a young company that attracts a lot of obviously Gen Zs, millennials. For the most part, we've grown in this virtual world during the pandemic. And old principles and methodologies are still very effective. We practice Rockefeller's methodologies because it allows, like our customer, you want them to be empowered. You want your employee to be very empowered in basically being part of collaboration, innovation, and setting the course of their priorities that ladder up to the company's priorities. They get to bake it, they get to own it. And we want our young people, whether they're in sales, ops, or our software engineers, to be communicating effectively through these different aligned priorities. And it allows them to build relationships. And we've done it more so through building out these different house pillars, similar to Harry Potter. You've got these different house colors, and they compete and they communicate with others across the organization they would never communicate with in a regular fashion. But everything is gamified through, again, you're aligned into charitable organizations. We do everything for JDRF's one of our charities that we basically contribute a lot to through these different house pillars. So they do lots of creative online, basically, games through Slack daily and monthly. It's a point system, a house point system. But it's more so the magic is in the communication, sharing.
Very cool.
So on the two things, on culture first, we are a very attractive company for particularly early career folks because we're focused on the ESG space. There's a good feeling about that. But from a culture perspective, what we then really do, from the moment we introduce ourselves, we talk about what we call the Why Green Way. And it's simply the way we do business. Internally, from a culture perspective, we have an initiative called the 5 C's. So everything we do leads with curiosity, creativity, communication, collaboration, and commitment. And we infuse that and talk about it in everything we do. Rethink, question the status quo, that's the nature of our product. And then some of the things that we do to sort of foster high retention, high employee satisfaction, we have volunteer days. Employees want to give back to the community. They want to go out and do something in the community. They have community days that they can invest in. They come back, they share those stories, and that all sort of fuels our mission as a company.
Love that. So 6 months ago, most of the discussions as we talked to our board members that they were having in their board meetings, and we were having as well, was this crazy, the great resignation where, you had team members that were getting offered, 50% or 80% or 100% more than their current, income. And how do you have good talent and how do you retain them? And we, something that we were concerned with because we felt like at some point this was not going to be sustainable. There was going to be a course correction. We're starting to see that course correction. But have you experienced the same, and how have you handled it?
Yeah. We had a couple of candidates we were hoping to close that got offers from Amazon and they couldn't resist. A few of them boomeranged back after a few months and just said, "Hey, this wasn't the fit I was hoping for." But yeah, I mean, we've kind of got our core culture that we're selling, right? We're selling this early stage funded startup, specifically trying to be transparent and grow the company. Everybody's got incentives to stay long term, and so that we're seeing it less so now. It'll be interesting to see what the next quarter or so looks like in terms of the talent available. And traditionally, the last 2 years just hasn't been there. So I'm kind of curious to see what that turns out to look like.
Yeah.
Yeah, attracting talent is everything. And we set we're only 75 people large. But those first 30 are super important, especially your leaders, because those leaders will be nurturing that pipeline of talent. And we start the journey very early. Sometimes it's 12 months of courtship and getting those top architects, software engineers, and sales folks. And once we are able to attract them, we can't afford the same comp model as where they're doing their internships at, and they've had other opportunities. But we can afford them a career opportunity and an opportunity to be very proud in a culture and a brand, but also building and innovating. Young people will take much less if they can contribute and feel like they are valued in an organization and that there's growth. And we always want to, as cliche it sounds, we want the young people that we are onboarding to be, the business leads for tomorrow, that there's succession planning behind them, and we've got to follow through with that. So, and that's our job. So we've had 100% retention. We haven't lost anybody, but it's important that we've also embedded cultural leaders. That's their full-time job, and so you're always looping feedback daily. We have our leaders in front of. We go to our sprint sessions. Our leadership will be there listening to the group. So the engineers aren't just being delegating or telling them what to build and what to do. They want to strategically know why. Who's using it? What other teams are basically contributing and how they're using their work? It's important that you're getting that cross functional effectiveness across all of your units. So we take great pride in the leadership component of that.
Cool. Yeah, we've been able to attract a lot of great talent during this time. During the Great Resignation, we've really benefited from it. And it wasn't so much about pay, it was really about culture. And doing some research about the Great Resignation, high on the scale for leaving companies was really culture. It was a lot less about pay. As people leave companies and they find what they believe to be a greener pasture, they stay in touch. And they say, things are actually really great where you're at right now. So breaking down barriers, creating a culture of learning. So, as you said, early career folks have an opportunity to learn and grow personally. That's really been driving high retention for us. And our employee satisfaction scores have been great.
Awesome. Well, our time is up. We're grateful for the content that you've shared today, and as we learn about fintech and insurtech and talk about culture, and appreciate your time and expertise to share it with us. Let's give them a round of applause. Thank you.
Thank you.
Thanks, guys.